decided to record a series of videos which are going to look to answer some frequently asked questions that I come across as an accountant. Okay, and so one of those is whether you should invest through a limited company or in your own name. Okay, and the sort of standard textbook answer is it depends on your own individual circumstances and you should seek professional advice. Now, whilst that is correct, it's also not very helpful for property investors that are getting started out and are trying to work out what is the best structure for their circumstances. So I thought I'd just give a quick kind of dive into sole trading and limited company investing, some of the pros and cons of both, and hopefully that'll help some of you decide what is the best structure for you. So starting off with sole trading. So if you invest in property in your own name, you're going to get taxed, pay income tax at whatever your marginal rate of tax is. Okay, so the key reason that people look to invest through limited companies nowadays is because as a sole trader, you can no longer deduct mortgage interest as an allowable expense. However, if you're a basic rate taxpayer, actually Section 24, which has inhibited the ability to deduct mortgage interest as an allowable expense, actually has no material impact on you. You can still get a basic rate deduction against finance costs, and so actually Section 24 isn't going to impact you, and therefore don't use that as a reason not to invest in your own name. The next advantage of investing as a sole trader is access to profits. So if you're somebody who's looking to live off your rental profits or to use them to top up your lifestyle, perhaps alongside a job, then potentially sole trader could be a good route for you. And the reason is it's easier to access your profits. So as a sole trader investor, you will pay income tax and then you can access any of your profits as drawings. Okay, so it's quite straightforward to take money out of your sole trading business to supplement your lifestyle or to indeed live off the rental income. The key disadvantage of investing as a sole trader is really for those who are high rate taxpayers. So if you're a high rate taxpayer, then Section 24 is going to have a material impact on you. Another thing to point out that is, even if you are a high rate taxpayer or an additional rate taxpayer, you still might be able to benefit from sole trading investing. Is that is if you're either married to a basic rate taxpayer or you have a partner who is a basic rate taxpayer. And now there might be some tax planning you can do where you can split income with your partner or spouse and thereby benefit from their basic rate of tax. So definitely if that is your circumstance, you should definitely seek professional advice. So we move on to limited companies now. And so you've probably seen from some of the disadvantages we talked about sole trading investing is why you should invest through a limited company. So the key advantage of investing through a limited company is for a high rate taxpayer or an additional rate taxpayer is that a limited company will pay corporation tax, which is currently 19%, versus potentially for a high rate taxpayer paying 40% tax or even 45% tax for an additional rate taxpayer. So you can clearly see that you're going to be left with more of your money at the end of the day if you invest in a limited company because you're paying a reduced rate of tax. And so what you can do is with that difference, that tax saving, you can use to reinvest the profits and buy more property. The next advantage of investing through a limited company is the ability to offset mortgage interest as an allowable expense. So whereas you invest as a sole trader, you get a basic rate relief for finance costs, which can be a bit complicated to work out. A limited company simply deducts mortgage interest as an allowable expense when it comes to work out its taxable profit. The main disadvantage of investing through a limited company is when you come to access the profits. If you're somebody who's looking to live off your rental profits, what you're going to find is if you invest through a limited company, there's a potential to pay double taxation. So you're going to pay corporation tax on any profits, but then when you look to extract profits from your company, you're potentially going to pay also income tax as well. So going back to the example of the property investor who's looking to live off their rental profits or use them to supplement their income, potentially in that case, a limited company is not the best option for you. Just as a way of a summary then, consider investing as a sole trader if your intention is to live off your rental profits or to use them to supplement your lifestyle, or you're a basic rate taxpayer, or if you're a high rate taxpayer but either your partner or spouse is a basic rate taxpayer and you're happy to buy property jointly with them. Consider investing through a limited company if you're quite content to keep profits within your limited company and use them to reinvest in further property. You don't need to access those profits in the short to medium term. And if you're a high rate taxpayer or additional rate taxpayer and you don't have a spouse or partner who is a basic rate taxpayer. Hopefully that was useful anyway to some people. If you've got any questions, please just comment below.